Very, very good morning to all of you, my friends. Welcome back. So, I hope you guys were able to solve the questions of standard costing. I've got a query from Swati. Let's see if the time permits. I will try to discuss this question. Else, I'll be taking the full-fledged lectures on standard costing in the May 2025 batch in this coming month only. So, you can refer those sessions also. I'll be discussing this question specifically for you, Swati. Don't worry. So illustration practical question number 14, I'll surely discuss in that batch. Don't worry, Swati. Now, we are done with standard costing. Now, let's start with the next part of the syllabus. In fact, my last chapter now for this batch, that is marginal costing. Now, again, this chapter also, it's a part of management accounting and it assists management in decision making. This chapter has again nothing to do with cost calculation. Cost calculation से इस chapter का कोई लेना देना नहीं है. It's a part of management accounting. It's an important tool of management decision making. It assists management in decision making. Now, before starting with this chapter, see, since 2 sessions are allocated to this chapter, so today I'll be covering all the basic concepts. We'll be discussing how these formulas are derived. We'll be solving 5 to 6 easy questions. And in the coming session, we'll be discussing more on decision-making question and few advanced practical problem. So we'll be going a bit fast. In the meanwhile, if you guys have any doubts or queries, you guys can please post your queries. Again, I'll be discussing the concepts that why these formulas, how come these formulas are derived in this marginal costing. Now, before starting with this chapter, let's discuss few terms. The first term what I want to discuss is marginal cost. When talking about marginal cost, it's the cost of producing additional unit. What is marginal cost? It's the cost for producing additional unit. Let's say we are manufacturing 10 units and the cost is 100 rupees. For 11 units, the cost will be 110. So herein, 10 is what? My marginal cost. Further, let's say I'm manufacturing 10 units and the cost is 100. Let's say if I manufacture 11 unit and the cost is, let's say, 112. Let's say the cost is 112. So the cost of producing additional unit rupees 12 is my marginal cost. So in short, what is marginal cost? The cost of producing one additional unit. The next term is variable cost. When talking about variable cost, it's the cost that varies according to production. ये वो cost है जो production के हिसाब से बदलती है. Production बढ़ेगा तो cost बढ़ेगी, production कम होगा तो cost कम होगी, and if there is no production, no cost at all. So what is variable cost? It's the cost that varies according to production. So let's say that we are manufacturing 10 units and the cost is 100. So for 20 units, it will be 200. For 5,000 units, it will be 50,000. For 1 lakh units, it will be 10 lakh. And for 0 units, it will be 0. So what is variable cost? The cost that varies according to production. ये वो cost है जो production के हिसाब से बदलती है. When talking about the examples of variable cost, it can be material, it can be labor, and we can say all the variable overheads. So these are the examples of variable cost. The cost that varies according to production is variable cost. जितना production होगा उस proportion में cost बढ़ेगा, and if there is no production, no cost. Example can be material, labor, and all the variable overheads. Now next is the cost that remain fixed irrespective of production. What is fixed cost? The cost that remain fixed irrespective of production. चाहे कितना भी production करो, this cost will remain unchanged. Also, the cost will be 1 lakh only. For 50,000 units also, the cost will be 1 lakh. For 1,20,000 units also, it will be 1 lakh only. And very important, for 0 units also, it will be 1 lakh. So irrespective of production, this cost will always remain constant. So let's say I'm the manufacturer of cricket bats. Now I have a factory which I have taken on rent of 50,000 per month. Now if I manufacture one bat also, my rent will be 50,000. If I manufacture 10 bats also, my rent will be 50,000. If I manufacture 1 lakh bats also, 1 lakh cricket bats also, my rent will be 50,000. So irrespective of production, and if I'm not manufacturing any bat, either due to off season or whatever it is, again my rent will remain constant, that is fixed up, 50,000. So irrespective of production, the cost that remain fixed is what we call as fixed cost. So when talking about the examples, it can be rent, it can be depreciation, it can be insurance, it can be salary. So the cost that remain fixed irrespective of production. ये वो cost है, चाहे कितना भी production हो, it will always remain fixed. If you guys have any doubts or queries, you guys can please post your queries. Further, see, I'll tell you a very basic and practical situation. You know, काफी companies जो होती है, 1 second guys. Most of the companies see that we generally hear that इसने business shut down कर दिया, this company is shut down, this company is a loss making company. The reason for all these losses and shutdown irrespective of the production. Many companies have to shut down their business, or many sole proprietary concerns also has to shut down their business. The main reason is what? That they are not being able to recover their fixed cost. Variable cost, it will be incurred only when there is some production. But this cost, it's the biggest headache for the company. So at the end of the day, after recovering their variable cost, the major target is what? That is to recover our fixed cost. And if they are not being able to recover their fixed cost, simply they have to shut down the business. Let's take a very basic example, wherein let's say I have laid a factory wherein I'm manufacturing these marker pens. I have laid down a factory and I'm making ink, then we can say the packing and other labor costs. So after including all the cost, the variable cost is what? 8. Now I am selling it for rupees 10. So per pen, how much I'm earning? Rupees 2 after recovering the variable cost. Now, let's say my fixed cost is 1 lakh. Now, what will be my first motto? Very simple. That is 2 rupees, 2 rupees, 2 rupees. At least I should collect 1 lakh so that I'm able to recover my fixed cost. I have to manufacture and sell that much of pens so that at least from 2 to 2, guys tell me how much pens I need to manufacture and sell so that at least I should be able to recover my fixed cost of 1 lakh. Waiting for your answers. Again, I repeat, after recovering my variable cost, that is 8 rupees is my variable cost, I'm selling this pen for rupees 10. So per pen, I'm saving rupees 2. My first target is what? To save my fixed cost, that is 1 lakh rupees. So can you guys tell me how much pen should I manufacture and sell that at least I'm able to recover my fixed cost? Waiting for your answers. So I've got answer from Srinivasan. Let me check. Very good, Shoaib. Shoaib, I think you were absent in the previous batch. You are facing difficulty in fixed overhead, and still you were absent, Shoaib. Yes, Kiran, Kavita, Sunil, Sash. So I've got answer from Om Krishna, Krishnam Gupta, Srinivas, Shoaib. Okay, I hope you are thorough with the concept, Shoaib, of fixed overhead. I have covered everything in detail of fixed overhead, Shoaib. Great. So Kiran Bala, how come 4? Can you please explain? So as expected, yes, the answers of all the students are correct. That is 50,000 pen. My first target will be what? That at least I should manufacture and sell 50,000, because see, per pen I'm earning how much? 2. So if I manufacture and sell 50,000 pens, I'll be able to recover 1 lakh rupees. And this 1 lakh is what? My fixed cost. So at this point, my profit will be 0. It means at least I'm not suffering any sort of loss. So this 50,000 in our language, we call it as break-even sales. So break-even sales is what? Where the profit is 0. So herein, in this case, when I'm manufacturing this pen for 8 and selling it for 10, per pen I'm recovering rupees 2. So my target is to recover my fixed cost, that is 1 lakh. So to recover 1 lakh, how much pen I should manufacture and sell? 50,000. So this 50,000 pen, at this point, we are indifferent. हमें कोई loss नहीं हो रहा, but we are not earning profit also. So let's say if I manufacture and sell 50,000 10 pens, that is 10 pen extra, then my profit will be rupees 20. So this is all what we will be discussing throughout this chapter. If you guys have any doubts in this part, again, I request you guys to post your queries. Further, I request you guys to copy this explanation. Do try to copy the concept part. Yes, practical question. If I'm discussing from study material, you can take the screenshot. But yes, as far as the concept part is concerned, I request you guys to copy. So please, explanation, guys. So I hope this part is clear to all. That is what is marginal cost, variable cost, and fixed cost. See, these words marginal cost and variable cost are used interchangeably. So don't get confused. If the question is giving you marginal cost, it means it is variable cost only. So in questions, these words are used interchangeably, that is marginal cost or variable cost. Now, let's start with this chapter. Now, when talking about this chapter is based on 5 terms. This chapter is based on 5 terms. That is sales, if we subtract variable cost from sales, we will get contribution. If we subtract fixed cost from contribution, we'll get the final figure profit. So sales minus variable cost is what? My contribution. Contribution minus fixed cost is what? My profit. So these are the 5 terms on which this chapter is based. Sales, variable cost, contribution, fixed cost, and profit. Let's say my total sales is 200. My variable cost is 120. Therefore, my contribution will be how much? 200 minus 120, 80. Let's say my fixed cost is 40. Therefore, my profit will be how much? 40. So sales minus variable cost is contribution. Contribution minus fixed cost is what? My profit. Now, when talking about the formulas, what will be the formulas of contribution? Let's say when talking about contribution, what will be the formula for contribution? Very simple, we can say sales minus variable cost. That is 200 minus 120 will be getting. There can be another formula also, that is profit plus fixed cost can also be contribution. Contribution will be what? So ultimately, this chapter is the easiest chapter. The point is, you should know how to do, adjustments karna aana chahiye. It's very simple chapter. So if you know how to make adjustments, plus, minus, that's it. This is all what about this chapter. That is sales, variable cost, contribution, fixed cost, and profit. Now, when talking about the first question, what the examiner is going to ask you in this chapter, the first question what the examiner is going to ask you in this chapter is what? PV ratio. Profit volume ratio. When talking about the formula, it is contribution divided by sales into 100. Contribution divided by my sales into 100. So if my contribution is 80, my sales is 200, it means PV ratio will be 40%. See, in simple terms, what is PV ratio? Contribution जो है ये, this 80, ये हमारी sales का कितना percentage है? What is the percentage of contribution to sales? This is what we call as PV ratio. What is PV ratio? What is PV ratio? The percentage of contribution to sales. जो contribution है 80, वो मेरी sales का कितना percent है? That is all what we call as PV ratio. So herein we can say that this 80 is what? 40% of my sales. That is 200. This 80 is what? 40% of my sales. And my sales is what? 200. So what PV ratio says? That is, what is the percentage of contribution to sales? Contribution जो है हमारी sales का कितना percent है? This is all what PV ratio says. Let's take an example. Let's say my sales is 1000. My PV ratio is 30%. What will be my contribution? Very simple, 300. Let's say my sales is 1 lakh. My PV ratio is 35%. It means what will be my contribution? 35,000. Let's say my sales is 10 lakh and my PV ratio is 40%. It means what will be my contribution? I repeat again, if my sales is 1 lakh, if my sales is 1 lakh, my PV ratio is 40%. How much will be my contribution? 40,000. So what PV ratio says? What PV ratio says? The percentage of contribution to sales. Contribution जो है mathematics. Question number 1. Let's say my contribution is 10,000 and my sales is 50,000. So what will be my PV ratio? Waiting for your answers. Question number 1, waiting. You guys can start posting your answers. Let's say my sales is 1,20,000. My PV ratio is 30%. So how much will be my contribution? Next question, let's say my sales is 1,50,000 and my variable cost is 75% of sales. So what will be my contribution? Next question, let's say my contribution is 90,000 and my PV ratio is 30%. So what will be my sales? Again, next question. My variable cost is 1,80,000 and my PV ratio is 25%. What will be my contribution? Waiting for your answers, guys. These are the 5 very basic questions. I want you guys to actively participate in the session. So let's see. Okay, so I've got answer from Om Krishna Gupta. First question, it is 20%. Swati 20%. Om Krishna Gupta 36,000. Please mention the question number. Okay, Kiran Bala 36,000, 36,000. Next is so third question. Let me check the final answer. Again, third question 37,500. Good. Fourth question. Fifth question, I'm getting bit different answers. Rest all the answers are correct. I'm waiting for fifth question, guys. Requesting you guys to solve fifth question. So fifth question, I have not got correct answers from anyone. Yes, Mr. Yash, waiting for your answers. Kavita, let me check. So see, herein we can straight away calculate that is contribution divided by sales into 100. So that is 10,000 divided by 50,000 into 100. So this will be 20%. Now my sales is 1,20,000 and PV ratio is 30%. It means contribution is 30% of sales. So here, when talking about sales, it is 120. So contribution will be 30% of sales. So this will be 36,000. Herein my sales is 1,50,000 and variable cost is 75%. See guys, now when talking about sales here is divided in two parts. See here also, sales was 200, variable cost was 120 and contribution was 80. So if PV ratio is 40% of sales, it means this will be what? 60%. So herein, my variable cost is 75% of sales. My variable cost is 75% of sales. It means my PV ratio will be what? 25% of sales. So my sales is 1,50,000. So into 25%. So this will be 37,500. Now the next calculation, 90,000 is my contribution and my PV ratio is 30%. So we have to calculate sales. So in short, हमें एक वो figure calculate करना है whose 30% is 90,000. So 90,000 is what? 30% of sales. So how much will be sales? So very simple, 90,000 divided by 30%. So 3 lakh will be my sales. And I think I got correct answers from everyone. Now see here and in this part, we have to calculate contribution. Since PV ratio is 25%, therefore variable cost will be how much? 75%. This 75% is what? 1,80,000. So we can easily calculate the total sales. So sales will be how much? 1,80,000 divided by 75%. So this will be 2,40,000. Since we have got the sales, so we can easily calculate contribution. So contribution will be how much? 2,40,000 is my sales. And contribution is 25% of sales. So this will be how much? 60,000. So Kavita, please recheck your answer. Swati, please recheck your answer. Kiran Bala, please recheck your answer. So here in my variable cost is 1,80,000. It's not contribution, it is variable cost is 180. Now PV ratio is 25. Is 25 equal to 180? No. Since PV ratio is 25, so variable cost will be what? 75%. Now 1,80,000 is what? Equal to 75. So how much will be 100? 2,40,000 will be my sales. Since we have calculated the sales, so we can easily calculate the contribution since we have the PV ratio that is 25%. So 2,40,000 is my sales. The contribution is 25% of sales. So how much will be my contribution? 60,000. So I hope this part is clear to all. Anyone having any doubts? So Kavita, your answer was incorrect. Swati, incorrect answer. Kiran Bala, okay, you have posted as sales. Okay, so I request you guys to please copy this explanation and these questions for practice. Giving you 5 minutes time to copy this explanation. So in short, what is PV ratio? The percentage of contribution to sales. That is हमारा जो contribution आ रहा है हमारी sales का कितना percent है, that is all what we call as PV ratio. Very good, Kiran. Now it is correct. Giving you 2 to 3 minutes time to copy this explanation, guys. Anyone with any doubts or queries, guys? Yes, Mr. Mallu Jadar, Shoaib, Srinivas, any doubts, guys? Let's take one more question. Let's say I'm manufacturing and selling 500 units at the rate rupees 10. So my total sales is 5,000. Let's say my variable cost is 7 rupees. So this will be 3,500. Therefore, my contribution will be 1,500. And my per unit contribution will be 3. We call it as what? Contribution per unit. Now, my first question, what will be my PV ratio? Very simple, contribution divided by my sales into 100. So my contribution is 1,500 divided by my sales, that is 5,000 into 100. So this will be 30%. This will be 30%. Very good, Swati. Now my question for you guys, let's say, again, don't do the calculation, a simple question, just answer as quick as possible. So we can say it's the fastest finger first. So who answers first? Let's say, so a simple question that instead of 500 units, let's say I'm manufacturing 700 units. I'm manufacturing and selling 700 units. My question is, will PV ratio, the PV ratio is going to change or not, or it will remain constant? Quick guys, waiting for your answers. So Shoaib is the first one to answer. Swati, Om Krishna Gupta, Srinivas, Kiran Bala, Yash, rest all waiting for your answers. Kavita, Mallu, Shash, Sunil. So as said that it will remain constant. Very simple guys. 700 into 10, that is 7,000. 700 into 7, that is 4,900. So this will be 2,100. So 2,100 divided by 7,000 into 100. So this will also be 30%. So what we can say, that PV ratio will remain constant at all the level of sales. If the question is silent and sales is increasing, it means what? The quantity is increasing. So whatever the quantity you guys sell, the PV ratio will always remain constant. But let's say some information is given in the question that instead of 9, instead of 10, there is a change in selling price by 10%. My selling price is reduced by 10% and my revised selling price is 9 now. So 9 minus 7, 2. So my question, is the PV ratio going to change or it's going to remain same? Let's say we are manufacturing and selling 500 units and there is a reduction in selling price by 10%. So there is a change in selling price per unit by 10%. So is the PV ratio going to change? Yes, it will change. Very good, as answered by all the students. Yes, it will change because this relationship is changed. So the point is, the major thing is what? This relationship is to be constant. And always remember, if the question is silent, what we have to assume? That the selling price per unit, no change. Variable cost per unit, no change. Therefore, contribution, no change. And therefore, PV ratio, no change. So always assume that if the question is silent, then PV ratio is constant at all the level of sales. However, if the question clearly specifies that there is a change in selling price per unit or variable cost per unit, yes, the PV ratio will change. So very simple, we can say the alternate formula for PV ratio can be what? Contribution per unit divided by selling price per unit into 100. So it will be 3 by 10 into 100, that is 30%. And what we have to assume, if the question is silent, then PV ratio will remain constant at all the levels of sales. However, if question clearly specifies that there is change in selling price per unit or variable ratio will change. Very simple, guys. If the question is silent, sales बढ़ रहा, it means what? The quantity is increasing. Sales is reducing, it means the quantity is reducing. The PV ratio is constant at all the level of sales. However, if the question clearly specifies that there is a change in selling price per unit or variable cost per unit, yes, the PV ratio will change. If you guys have any doubts or queries, you guys can please post. Further, I request you guys to copy this explanation. So this is all what about PV ratio. Everything is done and everything is covered in detail. So I try to memorize the concept that how you know, you should know how to make adjustments with the PV ratio. Now, without wasting time, let's proceed further with the next part, wherein the question can ask you to calculate break-even sales. When talking about break-even sales, what is break-even sales? That level of sales where there is no profit, no loss. सेल्स का वो लेवल जहां पे ना तो प्रॉफिट हो रहा है ना लॉस हो रहा है. और वी कैन से at point where sales is equals to total cost. At a point where the sales is equals to total cost, that is what we call as break-even sales. So let's take a question wherein let's say my sales is 200, my variable cost is 120, my contribution is 80, my fixed cost is 40, so therefore my profit is 40. So when we are doing the sales of 200 rupees, we are getting a profit of rupees 40. Again, stop using formula. Can you guys tell me at what point it will be break-even sales? When we are making a sales of 200, we are getting a profit of 40. So can you guys tell me at what point there will be no profit, no loss situation? Or we can say at the point where the sales is equals to total cost. Waiting for your answers, guys. You have to mention a point where the sales is equals to total cost, because जब हम लोग 200 की sales कर रहे हैं, the profit is 40. So can you guys tell me at what point the profit will be 0? Waiting for your answers, guys. Again, don't go with the formulas. Don't talk about formulas in my class. Okay, so Yashwani sir, when variable cost is 200, then it will be a loss, my dear. 200 minus 200, it will be 0. So it will be a loss. You guys have to tell me a point where there is no profit and no loss situation. Yes, Swati, Kiran, Srinivas, waiting for your answers. You have to tell me that what sales the profit will be 0, or at what sales the sales will be equal to total cost. So I've got an answer of 200 variable cost. I don't know, 100, 100, 160, 100. Anyone else? Mr. Srinivas? Miss Kiran Bala? You guys have to tell me a point where the sales is equals to total cost. See, I have got an answer of 160 from Mallu Jadar, that sir, at 160 the profit will be 0. So I think Mallu has calculated like this, that variable cost is 120 and the fixed cost is 40. So if the sales is 160, it means my profit will be 0. But see, Mallu, this answer is incorrect. First of all, why? So see, if the sales is reducing, the first point is, when talking about PV ratio, it is 80 divided by 200 into 100. So that is 40%. So when talking about PV ratio, that is 40%, it will remain constant at all the level of sales. चाहे आप कितना भी sales करो, it will remain constant. That is, the relationship between sales and contribution will always be constant. Because the question is silent regarding the selling price per unit and variable cost per unit, so we will assume that it is constant. Therefore, PV ratio will remain unchanged at all the level of sales. So herein, my PV ratio is 40%. So in this case also, my variable cost will reduce proportionately, and my revised contribution will be how much? 160 into 40%, that is 64. My fixed cost is 40, so this will be 24. So this is not the correct answer. Now, what will be the correct answer? Very simple. We want profit as 0. At break-even point, we want a 0 profit. The fixed cost always remain constant. So this 40 will remain constant. So this minus this should be 0. So this will also be 40. 40. This minus this should be 0. So this will be what? 40. This 40 is equals to 40%. So how much will be 100%? It is 100. So what I actually did, that is 40 divided by my 40%. This is how I got 100. And what is 40? My contribution. And see, my fixed cost is also 40. So at break-even point, contribution is always equals to fixed cost. So when talking about this 40 is what? My fixed cost. Because this contribution, how we calculate 40 plus 0, this is how we calculated this 40. So ultimately, fixed cost plus 0 contribution is what? My contribution divided by my PV ratio. So fixed cost plus 0 profit, we can say, divided by my PV ratio. At break-even sales, my desired profit is what? 0. My fixed cost is 40. So how come we will get this 40? 0 plus 40, this will be 40. So ultimately, no need to write 0. Simply the formula for break-even sales is what? Fixed cost divided by my PV ratio. Straight away, you can calculate that it is fixed cost divided by my PV ratio. My fixed cost is 40. divided by my PV ratio, that is 40%. So this will be 100 rupees. So this is all what about the basic of break-even sales. I request you guys to copy this explanation. Let's take one more question. Wherein, let's say the sales quantity is 500, the selling variable cost is 500 into 7, that is 3,500. So how much will be my contribution? 1,500. Let's say my fixed cost is what? 900. So my profit will be how much? 600. Contribution per unit will be 3. Now, my PV ratio will be how much? 3 by 10 into 100. That is 30%. Or we can say 1,500 by 5,000 into 100. We can say 30%. Now, if we want to calculate the break-even sales, very simple. My desired profit is 0. My fixed cost is 900. So this will be 900. This 900 is 30% of sales. So how much will be my sales? 3,000 rupees. So again, how I calculated? Very simple. When talking about break-even sales in rupees, it is fixed cost divided by my PV ratio. Or we can say fixed cost plus zero contribution, zero profit divided by PV ratio. Because at break-even sales, the contribution and fixed cost is same. So my fixed cost is 900 divided by 30%. So this will be 3,000 rupees. And see guys, one unit is sold for 10 rupees. One unit is sold for 10 rupees. It means how many units are required for break-even sales? We can say 300 units. 3,000 is the total sales. The per unit price is 10. It means if we manufacture and sell 300 units, we are at break-even. Now, let's discuss the another way to calculate unit. Let's take a very basic example. I am manufacturing this pen for rupees 7. In this question, let's say this is they are the manufacturer of pen, and I'm manufacturing this pen for rupees 7, and I'm selling this pen for rupees 10. So how much I'm recovering per pen? Rupees 3. Per pen I'm recovering rupees 3. Now my first target will be what? To recover my fixed cost, that is 900, to achieve break-even sales. So for per pen we are earning 3, and in short we have to earn in aggregate how much? 900. So how many pen we should manufacture and sell? Very simple, 900 divided by 3. 300 pens we should manufacture and sell for break-even sales. So 900 is what? My fixed cost, that is what we want to recover. Divided by my 3 is what? Contribution per unit. So this is how we can calculate the break-even sales in units also. So if you want to directly calculate break-even sales in units, it is fixed cost divided by my contribution per unit. So fixed cost is 900 divided by my 3. So this is how we get 300. If you guys have any doubts or queries, you guys can please post your query. Further, I request you guys to copy this explanation. Yes, anyone having any doubts or queries? Yes, Kavita, Kiran, Mallu, Om Krishna Gupta, Sesh, Shoaib, Srinivas, Sunil, Swati, Yash. Now, the first part is over where we discussed PV ratio. The second part is over. We discussed break even sales. Now, the third question, what the examiner generally do ask is desired sales. Let's see the same question wherein my sales is 200. My variable cost is 120. My contribution is 80. My fixed cost is 40. Therefore, my profit will be 40. The percentage of contribution to sales is what we call as PV ratio. That is contribution divided by my sales into 100. So my contribution is 80. My sales is 200. So into 100, so this will be 40%. Now let's say I'm making a sales of 200 and I'm earning a profit of 40. Let's say on a fine day, I am expecting a profit of, let's say, on a fine day, I'm expecting a profit of, let's say, 600 rupees. Let's say I want a profit of my desired profit. I have a desire to earn a profit of 600. Instead of 40, I have a desire to earn a profit of 600. Can you guys tell me? Again, don't apply the formulas. Can you guys tell me logically how much sales is required that instead of 40, we should earn an overall profit of 600? Waiting for your answers, guys. Yes, Shoaib, waiting for your answers, guys. See, very simple, guys. Very good, everyone. I've got answer from Kiran, Swati, Kavita. Kavita, your answer is incorrect, my dear. Mallu, waiting for your answer. Shoaib, correct answer. Om Krishna Gupta, correct answer. Swati, correct answer. Kiran Bala, correct answer. Kavita, please recheck your answer. Again, see, instead of 40, how much I want to earn? 600. My fixed cost will always remain constant, that is 40. So contribution minus fixed cost should be profit. So how much will be my contribution? 640, because 640 minus 40 should be 600. So fixed cost plus profit will be my contribution. This 640 is equals to how much? 40%. So how much will be 100%? 16. So again, what I did, very simple. We did 640 divided by 40%. How come 640? 40 plus 600 divided by my 40%. When talking about what is 40? My fixed cost. What is 600? My desired profit divided by my PV ratio. In break-even sales, my desired profit was what? 0. Here, the company has given that at least we want this much desired profit. So instead of 0, we will write the desired profit. Rest, there is no change in break-even sales and desired sales. If you guys have any doubts or queries in this part, you guys can please post. So when talking about, if the question is asking you to calculate desired sales, how come this formula is derived? 1600 is my profit, 40 is my fixed cost. So how much will be my contribution? 1600 divided my sales contribution is what? Equals to PV ratio. So how much will be my sales? 640 divided by 40%, 1600 will be my sales. If you guys have any doubts or queries, you guys can please post your queries. Kavita, hopefully you are thorough with this concept. I request you guys to copy this explanation. Let's take one more question. The same question again, quantity per unit price and amount. Let's say I'm manufacturing and selling 500 units, variable cost is 7, selling price is 10. So this will be 5,000, this will be 3,500, and this will be 1,500. If we subtract the fixed cost, let's say 900 is my fixed cost, we will get the final figure, that is profit. Now let's say again the relationship between contribution and sales, we can easily calculate, that is 1,500 divided by 5,000. So this will be 30%. Now on a fine day, I have a desire to earn a profit of, let's say 3,000. Again, what will be my sales? Very simple. Instead of 600, how much we want? 3,000. My fixed cost will always remain constant, that is 900. So how much this will be? 3,900. This is equals to 30%. So how much will be my sales? It will be 13,000 rupees. Again, the same way, what I did, fixed cost plus desired profit divided by my PV ratio. So my fixed cost is 900. My desired profit is 3,000 divided by my PV ratio, that is 30%. So 13,000 rupees. And since one unit is sold at the rate 10, So we can say 13,000 rupees divided by 10, we have to manufacture and sell 1300 units. Now again, for the purpose of calculating units, again the same way, I'm manufacturing and selling this. I'm manufacturing this pen for 7 and selling it at 10. Per pen, I'm recovering how much? 3. Now, earlier there was the task to recover 900 first. So for 900, how many units I manufactured and sold? 300. Now, apart from 900, I want 3,000 rupees extra. So in aggregate, how much I want to recover? 900 plus 3,000 extra. So total in aggregate, 3,900 I want to recover. And per pen, I'm recovering how much? 3 rupees. So how many pens should I manufacture and sell? So that at least 3 rupees, 3 rupees, 3 rupees. In aggregate, I earn 3,900. Very simple. 3,900 divided by 3. That is 1,300 pens. So again, how come 3,900 fixed cost, my 900 plus my desired profit 3,000 divided by my contribution per unit. So if you want to calculate desired sales in units also, you can directly calculate. This is all what about desired sales. This is the formula for desired sales in units, sorry, rupees and in units. How come these formulas are derived? I hope you guys are thorough with this part. I request you guys to copy this explanation. Thereafter, we'll start with the next part. Now, let's proceed further with one more point, that is margin of safety sales. When talking about margin of safety, it talks about what? That how much you are safe from the deadline of the business. What margin of safety says? How much you are safe from deadline of business. When talking about deadline, they are talking about what? Break even sales. So आप break even point से कितना ज़्यादा safe हैं? That is all what margin of safety. So let's say currently we are at a sales of 5,000 rupees. Currently we are at a sales of 5,000 rupees, and let's say my deadline is what? 3,000 rupees. My deadline is what? 3,000 rupees. So it means how much safe I am? 2,000 rupees. So let's say this is my deadline. I'm here at 5,000. So how much safe I am? 2,000 rupees. So this is what my margin of safety. 5,000 is what? My actual sales. 3,000, that is my deadline, is what? My break even sales. So this is how we will get margin of safety. Actual sales minus break even sales. Let's take one more question. As I said, my actual sales are 5,000. Let's say my variable cost is 3,500. My contribution will be how much? 1,500. So my fixed cost is, let's say, 900. Therefore, my profit will be what? Zero. Sorry, 600. My fixed cost is 900. Therefore, my profit will be 600. My break-even sales will be how much? My fixed cost is 900. My desired contribution will be 900, assuming 30% as PV ratio. So 3,000 is my break-even sales. This is my actual sales. This is my break-even sales. So at break-even sales, we have already recovered our fixed cost. See, at break-even sales, we have recovered our fixed cost. So जो भी extra sales होगी, उससे जो contribution आएगा, it will be my profit. So how much extra sales I am making over and above break-even sales? 2,000. After deducting the variable cost, that is 70%, how much I am earning? 600. Now my fixed cost is already recovered. So fixed cost is already recovered here. So how much will be my profit? 600. So what is this profit? The extra contribution what we earn after recovering our fixed cost. See, my total contribution is what? 1,500. Right? Of this 1,500, 900 is recovered towards, is adjusted towards fixed cost. So how much extra contribution I'm earning? 600. So 600 is what? My extra contribution over and above fixed cost is what we call as profit. So alternate way to calculate is what? Extra profit, that is extra contribution. Extra contribution is what? My profit. If we, this is equals to 30%, so this will be what? My 2,000 will be my sales, that is margin of safety sales. So we can say one more formula, that is extra contribution, what we call it as profit divided by PV ratio is what? My margin of safety sales. So what is profit actually? The extra contribution over and above break-even sales. Or extra contribution kitna hai? 600. Contribution is equals to 30%. How much will be my sales? That is 2,000. So extra contribution to hum log likh nahi sakte. So the correct word is what? Profit. So very simple, when talking about margin of safety, there are two concepts, two ways, either profit divided by PV ratio or actual sales minus break-even sales. If you guys have any doubts in margin of safety, you guys can please post further. I request you guys to copy this explanation. So herein we can say my actual sales is what? 5,000. My break-even sales is what? 3,000. My margin of safety is what? 2,000. So we can say sales can be divided in two parts, that is break-even sales, wherein we are recovering our fixed cost, and margin of safety sales. It means after recovering the fixed cost, whatever the extra sales we are making, and from that sales we are earning profit, is what we call as margin of safety. So if the break-even sales is 60% of the total sales, then how much will be margin of safety? 40%. If the margin of safety is, let's say, 25% of the total sales, so the remaining will be what? 75% will be my break-even sales. So the sales can be divided in two parts. Actual sales can be divided in two parts, margin of safety sales plus break-even sales. I request you guys to copy this concept. This is good and important also. If you guys have any doubts or queries, you guys can please post. Waiting for your queries, guys. Yes, anyone having any doubts or queries? Sesh, Shoaib, Srinivas, Swati, Yash, Mallu, any doubts, guys? Now let's discuss one more concept when the two period figures are given. Let's say 2023 and 2024, wherein the sales and the profit is given. Let's say my sales is 1 lakh and in 2024 it is 2 lakh. 23 it is 30,000 and in 24 it is 70,000. So when the two period figures are given, when talking about PV ratio, we can directly calculate it as change in profit divided by my change in sales in 200. So how much there is a change in profit? 40,000. How much there is a change in sales? 1 lakh in 200. So this is how we will get 40%. Now after PV ratio is calculated, we can easily calculate the fixed cost also. See, my sales is 1 lakh. Since PV ratio is 40%, so variable cost will be 60,000 and contribution will be 40,000. My profit is given, that is 30,000. So how much will be my fixed cost? Contribution minus profit will be my fixed cost, that is 10,000. So for 2024 also the same way, wherein my sales is 2 lakh, PV ratio is 40%, so this will be 80,000. My profit is 70,000, so this will be 10,000. So no change in fixed cost. If you guys have any doubts in this part, you guys can please post your queries. Further, those who don't have any doubts, a question for you guys. Let's say my sales is 1 lakh and 2 lakh. Let's say in the first year there is a loss of 10,000 and in the second year there is a profit of 20,000. You guys are required to calculate PV ratio. Waiting for your answers, guys. Those who are done with the copying part, I request you guys to please post your answer in case of this question. So I've got answer from Om Krishna Gupta. Let me check. I've got answer from Yash. Let me check. Shoaib. Let me check. Rest all waiting for your answers. Kavita, Kiran. Mr. Srinivas. Kiran. Mr. Mallu, waiting for your answers, guys. So see, yes, it is 30%, my dear. Yes, your answer is incorrect. So when talking about the change in sales, see, in the first year there was a loss of 10,000 and in the second year there is a profit of 20,000. It means how much is the change? That is from 10,000 to 0 and 0 to 20,000. So the overall change is how much? 30,000 divided by 1 lakh into 100. So minus minus plus. So 30,000 divided by 1 lakh into 100. One more question for you guys. Let's say my sales is 2 lakh and 4 lakh. Let's say my total cost is 1,50,000. And 1 lakh 2,20,000. You are required to calculate PV ratio. It is 320 and 150. Sorry, guys. Quick, guys, waiting for your answers. Very good, Om Krishna Gupta. Very good, Swati. Very good, Kiran. Kavita, incorrect answer, my dear. See, the formula is change in profit divided by change in sales into 100. We have got the total cost in sales, so we can calculate profit. It is 50,000 and this is 80,000. 4 lakh minus 320, it will be 80. So change in profit is how much? 30,000 divided by my change in sales, that is 2 lakh into 200. I request you guys to please copy this explanation. Again, it will help you while revising for the exams, giving you 3 to 4 minutes time to copy everything. So, guys, now let's sum up what we have discussed till now, and then we will start with the practical questions. So, let's sum up wherein we started with this chapter, marginal costing, wherein we first discussed marginal cost, that is the cost of producing additional unit. Thereafter, we discussed variable cost, that is the cost that varies according to production. Thereafter, we discussed fixed cost, that is the cost that remain fixed irrespective of production. Thereafter, as I said, that this chapter is based on 5 terms: sales minus variable cost, it will be contribution, contribution minus fixed cost, it will be profit. Further, we discussed that first question what the examiner is going to ask you is PV ratio. What is PV ratio? The percentage of contribution to sales. So contribution divided by sales into 100. And this PV ratio will remain constant at all the level of sales. However, if the question clearly specifies that there is change in selling price per unit or variable cost per unit, yes, the PV ratio will change. Thereafter, we discussed break-even sales. It is that level of sales where there is no profit, no loss, or we can say sales is equals to total cost. When talking about the formulas, again, very simple. If you want to calculate it in rupees, it is fixed cost divided by PV ratio. And further, if you guys want to calculate it in units, it is fixed cost divided by contribution per unit. Now, the next part, that is desired sales, wherein if the desired profit is given, and if you want to calculate desired sales, it is fixed cost divide plus desired profit divided by PV ratio. And if you want to calculate it in units, it is fixed cost plus desired profit divided by my contribution per unit. Thereafter, we discussed margin of safety sales, wherein it is actual sales minus break-even sales. And when talking about one more way, it is profit divided by PV ratio. In short, actual sales is divided in two parts, that is break-even sales or in margin of safety sales. Further, the last part, what we discussed is wherein two period figures are given, we can easily calculate PV ratio, wherein the formula is change in profit divided by change in sales. Again, there is a logic behind this formula, but as of now, this much discussion is more than sufficient. So change in profit divided by my change in sales into 100. So I request you guys to post your queries, else we'll be discussing few questions. So just giving you 3 to 4 minutes time, whatever the queries you have, you guys can please post your queries. Asking you guys individually, if any queries in this part till now, you guys can please post your queries. So waiting for your queries, guys. Till now, anyone having any doubts or queries? Don't want to go in the theoretical part. We'll be discussing more of the concepts and the practical questions only, Kiran. Anyone else? Those who are watching over YouTube can post your queries over the portal, or you guys can join over Zoom and can post your queries. I'll be covering the practical part most of, Kiran. It's straight away a theory question, so don't want to go into theory part. Only 2 sessions are allotted. So I have to complete as much as practical part only. So guys, done with the theory part. So let's take a break of 15 minutes. We'll be back. I'll be back after 15 minutes, wherein I'll be giving you few questions in this session. And I want you guys to participate and answer all the questions. So let's take a break of 15 minutes, guys. Edwin, sir, are you there? Break started. So welcome back, guys. So now we are done with the theoretical part or the concept part. Let's start with few practical questions. I'll be giving you guys few questions in the live session, and I want you guys to solve these questions. And accordingly, the question whose answers are incorrect, I'll be discussing these questions. Tomorrow we'll be discussing some advanced problems. So let's start with some basic questions. Admin sir, we are live, right? Admin sir, we are live, right? Welcome back, guys. So let's start with few practical questions. I want you guys to post the complete answer by the question number 1, 2, 3, 4, and 5. So let's start. You can start solving the question. So waiting for your answers, guys. It is fixed cost 7,92,000. So total 5 questions. I request you guys to please post your answers. Waiting for your answers, guys. So, Om Krishna Gupta, I think all your answers are correct. Kavita, I think first question it is correct. Kiran, first question it is correct. Swati, again, first question it is correct. First, second, third question, I think it is correct. So the main questions are question number 4th and 5th. So waiting for your answers, guys. Very good. I don't know your name, but all your answers are correct. So the important part is 4th and 5th question. Let me check your final answer, Om Krishna Gupta, for question number 2. So specifically 4th and 5th, I'm waiting. Giving you 5 to 7 minutes time to post your answers. Still waiting for answers of question number 4th and 5th. I don't know, Mr. Om Krishna Gupta. Waiting for your answer. Fixed cost is 90,000. PV ratio is 30% and margin of safety is 25%. Yes, Swati, Yash, Mallu, Kiran, Kavita, Om Krishna Gupta, Sunil, waiting for your answers. Which question you are answering, Kiran? So let me check Om Krishna Gupta and Kiran Bala. Take your time, guys. Question number 4th and 5th. It is 7,92,000. Om Krishna Gupta. So these are the answers of question number 1, 2, and 3. Now, when talking about question number 4, my break-even sales is my fixed cost is 90,000, PV ratio is 30%. Therefore, my break-even sales will be 90,000 divided by 30%, that is 3 lakh. Now, since margin of safety is 25% of sales, therefore break-even sales will be 75%. So 3 lakh divided by 75%. So this will be 4 lakh. This is what my actual sales. So once actual sales is calculated, we can easily calculate profit. So actual sales minus break-even sales is margin of safety sales 1 lakh into my PV ratio, that is 30%. So therefore profit will be 30,000. How come 1 lakh? This is what my margin of safety sales. How come it is derived 4 lakh minus 3 lakh? So fifth question, I'm getting different answers. 1,32,000, 1,76,000, 1,98,000, 1,17,000. So many answers of one question. Still, I request you guys to try. Last 2 to 3 minutes. That's it. Now see, selling price is 20, variable cost is 14, fixed cost is 792. You are required to calculate the number of units to be sold to earn a profit of 10% on sales. So let the units sold be X. Therefore, my sales will be 20X. My variable cost will be 14X. My contribution will be 6X. See, 20 is the price and units are X. So my sales will be 20X, variable cost will be 14X, contribution will be 6X. My fixed cost is 7,92,000. If we subtract, we should get 10% on sales. So 20 into 10%, that is 2X. 20X into 10%. So in short, 6X minus 792 should be 2X. So 4X is equals to 792. So X will be 1,98,000 units. So Swati, Kavita, Kiran, your answers were incorrect. Further, I request you guys to copy the questions and the solution, giving you 3 to 4 minutes time. Those who have doubts in question number 4th and 5th, you guys can please copy those who are having incorrect answers. You guys request you to please copy the solution. And I hope this part is clear to all. Swati, Kavita, Kiran, your answers were incorrect. One more question for you. So, a question for you guys. A manufacturer manufactures 2 lakh units of a product at a cost of 4.5 per unit. Later on, he manufactures 3,50,000 units at a cost of 4.20 per unit. However, its fixed costs are decreased by 30%. Calculate the variable cost per unit and the fixed cost original, that is without reduction. So a good question, a simple mathematics. So waiting for your answers now. Yes, guys, waiting for your answers. It's different from the questions that are there in the material. So it's a new question for you guys. A simple mathematics. So waiting for your answers, guys. So what will be the variable cost per unit and the fixed cost per unit? Sorry, total fixed cost. Waiting for your answers, guys. A manufacturer manufactures 2 lakh units at a product cost of 4.5 per unit. Later on, he manufactures 3 lakh 50,000 units at a cost of 4 rupees 20 paisa per unit. However, its fixed costs are decreased by 30% in the coming year. So you are required to calculate the variable cost per unit and the fixed cost original. Still, I have not received answers. So let's see who answers first. It's a bit different from what I have discussed till now, but it's a simple mathematics, guys. Yes, Swati, Kavita, Shoaib, Om Krishna Gupta, Kiran Bala, Mallu, waiting for your answers. Shoaib. Still, I have not received any answers from your end. Last 3 minutes for you guys. Thereafter, I'll solve this question. I want you guys to at least try and solve the question. That's okay. Take your time. Last 3 minutes, guys. Yes, Swati, Kavita, Shoaib, Kiran. Till now, I've not received any answers from you guys. Again, don't try to memorize the formula. Just try to apply the simple mathematical concept. That's it. Om Krishna Gupta, no. It's a new question, my dear. Who knows? They can ask in January 2025. Last 2 minutes, guys. It's a very simple and basic question, a simple mathematics. Not able to solve. Om Krishna Gupta, not able to solve. Kavita Kulla, not able to solve. Yes, rest all. Swati, Shoaib, Kiran, any answers? Okay, so Mallu Jadar, sir, fixed cost is 3.01. Swati, sir, no, sir, please give us a hint. Okay, let assume variable cost per unit be X and fixed cost be Y. This is the hint for you guys. Let's assume that the variable cost per unit be X. This is all what we have to calculate. That is fixed variable cost per unit and fixed cost total. Last 2 minutes more after this hint. Anyone ready with answers? So in the first year, my units manufactured are 2 lakh into the variable cost per unit, that is X. So this will be my total variable cost plus my fixed cost is Y. And total will be what? The total cost is variable cost plus fixed cost is what? 2 lakh into 4.5, that is 9 lakh. This is for my first year. Second year again, 3,50,000 into X. Now see, in the second year, the fixed cost is reduced by 30%. So it will be 0.7Y. And the total cost will be 3,50,000 into 4.20. So this will be 14,70,000. So now everything is ready with us. So let's multiply it by 0.7. So this will be 1,40,000 X plus 0.7Y is equals to 6,30,000. So this will be rupees 4 per unit. And when talking about substituting the value in equation 1, let's say this is equation 1. So 2 lakh into X plus Y is equals to 9 lakh. So Y will be 1 lakh. That is my fixed cost. Very good, everyone. I request you guys to please copy the solution. Yes, Kavita, Mallu, Swati, Om Krishna Gupta. Any doubts, guys? Yes, your answer is correct now, Om Krishna Gupta. I request you guys to copy the solution. Even I don't know Om Krishna Gupta. See, Mr. Gupta, there is no end of marginal costing. Examiner can ask, see, let's say if you have practiced 100 questions, examiner always remember, examiner is going to ask you 100 first question. That is altogether a new question. So the point is, stick to the concept. Yes, practice is required, but yes, focus on the concept. Why these formulas? So herein I have applied the basic principle, that is variable cost plus fixed cost is total cost. That's it. So there is nothing new. The point is you have to improve your concepts. That is the key. Anyone else, guys? So for second year, it will be 1 lakh. See, fixed cost is how much? 1 lakh. So second year it will be 70,000. Rupees 4 per unit and 70,000. See here, and it is cost 4.20 per unit, 4.5 per unit. Swati. Okay, so one more question for you guys. So as the question progresses, the difficulty level will increase. So this is the question for you. A newspaper presently sell 1 lakh copies of Morning Daily. Now they are planning to publish Evening Daily also, wherein the selling price is given for Morning Daily and Evening Daily, that is 2 rupees per paper and 50 paisa per paper. Variable cost is 1.2 per paper and 0.22 per paper. Fixed cost, weekly fixed cost is given, that is 2,40,000 per week and 10,000 per week. Now sale of Morning Daily will fall by 1 copy. Sale of Morning Daily will fall by 1 copy of every 10 copies sold of Evening Daily. You are required to calculate break-even sales in units for Evening Daily. Okay, guys, I request you to please take the screenshot of this question. I request you guys to take the screenshot of this question. And this question is a homework for you guys. So as soon as you guys solve the question, in the next session, at the start of the session only, I request you guys to post your answers. So let's see, who answers first and whose answer is correct. Again, it's not as that simple question that, जैसा लग रहा है उतना simple question नहीं है. So read each and every word of the question carefully. Every line has some or other meaning. Try to solve the question with peace of mind and patience. You will be able to solve. Do take the screenshot, giving you a minute time to take the screenshot. So in the next session, be ready with the answer. Be ready with the answer of this question. So till then, the first thing I request you guys to revise what I have discussed till now. Try to solve few basic questions, and thereafter try to solve this question. Be ready with your answer. In the coming session, I'll finish off this chapter. I'll be covering few advanced question also, just like this. Just like we have discussed few question in this session. So in the coming session, we'll be discussing many advanced problem, few decision-making problems also. So be ready, be prepared for the next session, and yes, waiting for the answer, waiting for your answer for this question in the coming session. So till then, take care of yourself. God bless you. Do revise what I have discussed till now. See you guys in the next session, and we'll finish off marginal costing. Take care, guys. God bless you. Admin sir.